Thanks for stopping by my market report. I am Mike, and a little bit about this market report is that we follow the mortgage rates. We don't get so much into the rates itself, but what the trends and where they're moving versus actual rates, because there's so many different variations of uh, the rates that pricing that goes into those rates. It could be from occupancy, it could be types of properties, it could be even sometimes locations, how much equity purchase, refinance, those different things. So there's a lot of things that go into them, and also different loan programs have different rates as well. So we don't get into those, but we get into what's driving the interest rates on a daily basis, what's making them going up or down. If they're going sideways, we kind of let you know where they're kind of going in that direction. A little bit about myself is I am a loan officer. I do work with a national lender. So if you guys got questions about mortgages, you got questions about rates, even looking to looking to refinance, or even looking into buying, please feel free to reach out. Love to be able to discuss your needs and how we can help you guys out. In the meantime, let's go ahead and start this report. We'll start off with the economic reports. As you can see by the highlighted uh, features here, we got quite a few to go over. We'll start with this. Well, sorry about that. We'll start with the retail sales right here, because this kind of leads into more of the other stuff. So the retail sales is a kind of a big weighted, heavily weighted for importance data here. And the previous month, it was back in February, we had a drop of 3%. Forecast calling for a rise of 5.9%, and it jumped all the way up to 9.8%. Obviously, this is getting a big boost from the stimulus checks that were recently mailed out to people, and well, the retail sales is the benefactor. Now, when you took out big ticket items for retail sales, it dropped 2.7% back in February. Forecast calling for 5%, and it's went up a pretty big number here at 8.4% in the month of March. Now, we also got some manufacturing data to go over. This one is the Philly Fed, which is basically manufacturing in the Philadelphia region. So these are pretty high numbers, but we had a 51.8 back in March. It's forecast to dip down to 42. It did dip slightly to 50.2, but still, these are phenomenal numbers. We're way above zero on these, and a lot of these numbers we're seeing are 50-year highs. We also got the New York Fed, New York, so basically, or the Empire State Index, which is the manufacturing data for the New York region. And we had a 17.4 back in, again, in March. Forecast calling for 19.5, and it exceeded that to 26.3. Very good numbers here. Now, being Thursday, we get the jobless claims, initial jobless claims every Thursday. And we dipped on the 700s, including last week's report was at 744,000. Forecast calling for 700,000, and it dipped much further down to 576,000. So that means only 576,000 people applied for unemployment for first-time benefits last week, which is a very good sign in terms of fewer and fewer people are applying. Now, as we can see here, continuing claims, we didn't drop a little bit. It was almost the same here. So it went from 3.734 to 3.731 million claims. So fewer people, I mean, we're starting to see that come down a little bit, the continued claims here. Capacity utilization improved here for the month of March. So in February, it was at 73.8. Forecast calling for a bigger uptick to 75.7. However, it did go up to 74.4%. We also got industrial production. It went from a drop back in February of 2.2% to a forecast of increase of 2.8%, and it didn't come in quite expectations at 1.4%. Business inventories for the month of February, so back in January, it rose 0.3%. Forecast was gotten at 0.5% increase in February, and it came right at expectations. So pretty decent news right there. And last but not least, this is kind of an important one here too. We got the NHB's Home Builder Index. This kind of gives you the confidence level for home builders as to if they're going to continue building homes or not. Now, previous month, back in March, it was at 82. Forecast was calling for 83, and it came in that forecast with a slight uptick of 83 here. So a decent overall number right there. We will want to keep an eye on that with the rising rates, affordability kind of shrinking a little bit. We'll have to kind of watch to see if home builders will continue building more homes, or if they're feeling confident, or if they may pull back a bit. So let's go ahead and take a look over at the headline news. Stocks are up so far this morning. It's taking its cues not from the strong data, but also good, strong corporate earnings. We're still getting more financials, like Bank of America came out with some good ones. BlackRock good financial reports. Yesterday we had Goldman Sachs, JP Morgan, Chase, as well as Wells. All great numbers. Now, we'll probably see those continue to improve as we see yields rise. When we see rates and yields rise, they seem to make more money, have more profit taking in those areas. Later today, we'll have a few more Fed speakers speaking, so of course, investors will be listening for any clues as to the Fed's thought and process for upcoming moments about any possibility of any rate hikes, any tapering news, inflation or economy, where they think where things are at. So, without further ado, let's jump see what mortgage rates are doing today. We are getting a big improvement. We got a big rally going on right now, and we're touching the 50-day moving average. We're up 27 basis points, which is going to lead lenders coming out with better pricing than what we saw yesterday. So great news for those who are looking to refinance or purchase. Yields shot right through this really strong floor of support. This has been holding for quite a long time here, and even shooting so far right below. We're dropping almost 9 basis points on the yields, so we're down to about 1.551 or 55. So very good news right there, and it's also kind of starting to approach its 50-day moving average. So we'll have to see if that will continue to drop to the 50-day moving average like its counterpart, the MBS mortgage-backed securities, or not. So good news overall. Didn't know if we would see this big of a drop, but it's a welcome change for us who are in the mortgage-related areas here. You guys have a great rest of your day. Thanks so much for watching. And again, if you guys got questions about mortgages or rates or loan programs or refinance or purchases, please feel free to reach out, and we'd love to be able to answer what questions and help you however we can. You guys have a great rest of your day. Thanks so much for watching. See you in tomorrow's video. Bye-bye.